Hello, guys. So this is the pre-market analysis of 30th of March, and let's try to understand how the market is positioned for today. So it's a monthly expiry, it's a weekly expiry, it's a financial year expiry, right? It's a quarterly expiry, so it's going to be a volatile day. You can expect big moves. Otherwise, also we are getting that, yesterday, last day, we have seen 500-point down move, and if you compare it with the previous day's high, it's almost 700-point down move. 2 days back we have seen 1,000-point up move. So this is what the kind of market, and the VIX is also 25 above. So volatility is natural, but being the last expiry of the financial year and also monthly quarterly expiry, you'll be getting such kind of volatile moves. That's what expectation. And there are two forces which can drive the market, I would say drag the market. Geopolitics, of course, the war and oil related aspect, we need to look into that, and that concern is there, which is getting higher. VIX is also spiking above 25. US VIX, if you see, that's went above 30, which is very uncertain scenario. And RBI impact also there, which is on the banking stocks. So structurally also banking stocks are weak. Domestically also, if you see, banking stocks are weak. So HDFC otherwise are facing problem. So this can add pressure to HDFC. So Bank Nifty may perform bad or underperform compared to Nifty. So if you're someone who is looking to short the market, it is better to short Bank Nifty because double side effect is there, war oil effect is there, and this RBI impact also there that I'll be discussing. If you see Nifty, even if Bank Nifty comes down, they may try to stabilize Nifty at least with Reliance or IT, something like that. So it's very clear on Bank Nifty that it is very negative. Nifty is also negative, but they can manage to some extent. Okay, so let's start with the geopolitical update. Then I'll go to the RBI decision and impact. And you see, rupees hitting all-time low. At one point, it came very close to 95. When I still remember last year at this time when rupee was trading around 83, 84, 85, coming to 86. At that level itself, we were crying literally, and we were talking about there is a projection by SBI, or I don't remember, that it may go to 92. That we considered very seriously. Now 92 is crossed, 94 is crossed, coming to 95. So things are looking difficult, and RBI interference is required very much. That's why there is an impact that we need to discuss. So banks are relatively weak also. So coming to geopolitical update, last Thursday, Trump have extended the deadline for Iran till April 6th. So he warned that after that, US will attack Iran's power plants and everything. So you got some relief, right? Till April 6th, nothing is going to happen. That was a relief. So normally, when you see such kind of extension, when you see such kind of relief, market normally tend to become positive. What happened on Friday? There is a big gap down and there is a continuous down move, right? Almost 500-point dip is what you have seen on that day. And if you compare with the previous day high, Thursday's high, intraday high, which was Sensex expiry, made a good high, which is a very good up move also. And towards the end, there was a 200-point sell-off. So that 200-point and this 500-point together is around 700-point is what you got from Thursday's intraday high to Friday's close. So market reaction was very negative, which was not expected also on that day. Previous days up move was also not that expected. So it's complete volatility on both the sides. Now, why market fell despite this extension, despite that relief? Even now, if you look at it, crypto is also coming down and everything is coming down. That's there because you see, despite this extension, there was a continuous news flow which is coming. Escalation is increasing. Iran is attacking. Israel is attacking. There were important developments also. Iran's foreign minister have confirmed that Israel have attacked the steel factories, power plants, and civil nuclear sites. And the claim is that Israel cannot do alone, right? Israel, if it is done, it is with the knowledge of US, and it is done in coordination with the US only. So even though you are talking about there is a kind of ceasefire, you have given 10 days deadline, April till April 6th, you don't want to worry there won't be any attack, but still there are attacks which are confirmed, and the claim is that it is done along with the US only. So and then Iran is giving warning also, the counter threat also there. Iran is saying that it will target industrial infrastructure across the Middle East. Think about it. If something like that, if Iran is doing it, Iran have the capability to do it, despite the fact that you are saying that you have destroyed everything. Still, Iran, as threatening, and Iran have something. Otherwise, they won't, do like this, right? Specifically, they are very clear about the aluminium plants in UAE. It is very important because these are among the world's largest aluminium producers, and they are supplying aluminium to US defense sector also. So as a result, you have seen the US market, because of this escalation, have crashed, and Dow Jones have fallen almost 1.73%, S&P 500 almost 1.7%, Nasdaq almost 2.2%. And if you look at VIX volatility index, it's increased 13% on last day and moved above 31. When we were seeing above 17, above 20, that itself was already high. When it closed 25 last week, we have seen, well, now it is closing 25, it's uncertain. 30 is a very high risk zone, right? So the volatility is so crazy high, and that shows uncertainty, fear, which is there in the market. Apart from that, if you look at the developments which happened in weekends, around 3,500 US soldiers were reaching Middle East, and they are looking for capturing Iran, right? That site where petroleum production, and Khar Iceland, right? So they are trying to capture that militarily. So there will be a possible ground attack by US. I don't know how long it will go. I don't know whether it will start, because see, you are sending 3,500 or even 35,000. Iran is waiting there with, according to their claim, it's 10 lakh military personnel are there. So if there is a ground attack, who's going to because US have already seen, Vietnam War and then Afghan War and Iraq War. Significant damage has been made in for the US also, US Army also, because there is a possibility of then guerrilla war. There is a possibility of US people are not able to understand the terrain despite these technology use and everything. Issues are there. The ground attack, if you initiate, ultimately numbers matters more than technology. If it is airstrikes and other things, yes, you have the technology, you can do it. Iran may not be able to prevent it, but if it is a ground attack, then the numbers matters, the terrain matter, the guerrilla warfare that matters. The allies, they also will join, right? Houthis are there and Hezbollahs are there, so they also can somehow get into this. So in all ways, US can get trapped if it is against Iran, unlike Iraq or any other Afghanistan, right? Apart from that, there are threats of, nuclear action possibility also. So the situation is that it is not getting stabilized soon. And what is the reaction in the oil market? Oil price have increased 3 to 5%. Now this Houthis have also entered into this, and they are now trying to block this Red Sea. So on one side, Iran have blocked the Strait of Hormuz. Other side, when Houthis are joining, they block the Red Sea. Means, the oil through these two will be completely getting blocked. That means from the Middle East, all the passages are actually trying to, now it is getting blocked, and the prices is again going to increase very much. Now, if you see, still WTI is just below 100. Brent crude is above 105. Not a good scenario. Gift Nifty is indicating around 22,770 level. But it looks like though that level is looking like 50-point gap down opening, but I am expecting something like 100, 150-point gap down opening, right? If you compare it with the Bank Nifty also, Bank Nifty could be even more. Bank Nifty can underperform. If you look at all ADRs are negative, except Wipro. Even Wipro is 0.5% negative, right? Others are down by 2.5 to 3%. But already, we have seen that it is corrected earlier. So in our market also on last day. So there is not a big negative, indication as of now. Now coming to this RBI impact on banks. Let's try to understand this arbitrage trade. I hope you know the arbitrage. Arbitrage means two markets and how it is traded and the difference, how you make the profit and everything. So the whole system is arbitrage trade. So normally what banks used to do is they buy dollars from exporters, right? And exporters, they get in terms of dollars. So the banks will buy dollar from exporters and they sell in offshore NDF market and they earn that small arbitrage. Arbitrage is the price difference. So on paper, if you see, it looks properly hedged, but in reality, this is a continuous dollar buying. Now, when this happens, when you buy dollar aggressively, what will happen? Rupee will come down. The demand for dollar is high and supply is getting less. So that will weaken rupee, and that's why rupee was depreciating. Now, if you look at offshore market, that's driving the domestic currency movement. So this was the thing which was happening. Now RBI said, yes, enough is enough. The new rule is no bank can now hold more than 100 million net position. So the current exposure, if you see Indian private banks holding, especially HDFC, ICICI, or like that, if you see 10 to 18 billion onshore. Now From that 10 to 18 billion, it have to reduce to 100 million by April 10. So what is going to be the impact? You can imagine, right? So clearly negative for the banks, because that is also some, even if the small difference arbitrage, that itself is cumulatively, if you see, that's a big profit. So this is negative for banks, especially the three big banks like HDFC, ICICI, and Kotak, and then Federal Bank. All these will be affected. So now the possible relief is that banks have requested 3 months extension, and today we need to see what is RBI's response. Right, the market will definitely watch RBI's response. I think till then the banks will be very negative. So if you are someone who's betting on the downside, instead of betting on Nifty, it will be better to bet on Bank Nifty on the downside. Okay. So if I need to trade put, if I'm an option buyer, if I need to buy only put, it is better to buy on Bank Nifty, and premium is also less because it's getting into monthly expiry. So you don't face that problem. The small positive is again, two LPG tankers have crossed the Strait of Hormuz. That is something positive. But two LPG tankers, what does it have to do with our big population? And even the hotels are still closed. The war is happening there. Our hotels are closed, and people are demanding for work from home, that kind of situation, because food is not available, right? Coming to FII data, the net sold for 4,400 crore last day. DIS bought for 3,600 crore. Then who gave that 500 point fall is the question. Whatever FII sold, almost equal to that DIS bought. But then how, right? So that itself is telling the fear in the market. Coming to open interest, index futures, OIF increased 9%, and call OI increased by 30%, put OI only 5%. So calls are 30%, put is just 5%. So the PCR has now dropped from 1.19, which was bullish last day after that move, to 0.92, which came into bearish territory because of this heavy call writing. If you look at the participant positioning in terms of options, I'll discuss separately options and futures positioning. If you look at options, clients are 18% bullish, retailers, FIAs are 13% bearish, prop traders 4.3% bearish. So clients are bullish, retailers are bullish, FIAs and prop traders are bearish, FIAs are strongly bearish in options. Now coming to futures, retailers are 70% long, prop traders are 75% long, FIAs are 85% short. So the prop traders and the clients, retailers are long, and FIAs are short in futures. Now, it's a monthly expiry. Be very careful with that. You can expect sharp moves that as an option buyer, as a scalper, you will be able to capitalize it if you use it properly. If you would like to learn this, if you like to see the live trading sessions and understand things, you can join our live market mentorship also today, right? So the summary is, you see, there are positives. That is because of this extension of deadline on attack till April 6th. Some tanker movement have also happened, but this extension was there on Thursday also, but you have seen market fall. Tanker movement, those two tanker move, nothing have to do with that, but more negatives are there. War escalation, US market crash, US VIX is above 30, India's VIX is above 25, oil prices rising, RBI rule impact on banks. So rather than even thinking about a call trade, you may think that market have fallen, enough is enough, now it may bounce back. Instead of that, just look at put options, sell on rise, but look for a bounce. Any bounce will get sold off. Okay, so US futures opened around 0.5 negative, and that again shows that weak global sentiment. Technically last day we have already discussed, so I'm not getting into that. Okay, so technically if I want to discuss, yeah, last day 130 point gap down and then closed at around 22 820. You can see long bearish candle, very heavy selling, downward trend is clearly intact. 100 moving average broke 200 EMA last day we discussed about 50 breaking 200. Now 100 is about to break 200, that also broke, and that's happening first time since April 2025. Fibonacci retracement also, it's near that 78.6 retracement level of the entire rally. Now RSI is below 40, again selling signal. So if you look at it, the resistance is very clear at 23,500, support is at 22,800. That's where it is standing now, but it is going to open below that. So the next support is at 22,500. Breakdown below 22,800 can lead to 22,500. If that is breaking, then 22,000 is what we can expect. Bank Nifty, last day 400 point gap down and then closed at around 52,270. Again, a long red candle, the downtrend is continuing. Now 50 moving average is now going to cross 200 moving average. That is going to be a golden crossover if that happens on the downside. It may happen today because of the negativity that we see on banks, and RSI is 33. That is again below 40, which is again bearishness. So the support is at 51,500 and 51,300 range. Resistance 53,000 range. Okay. So open interest, again, if you see call side maximum OI still at 2,300, 23,000. Heavy call writing. and then 23,500, 23,200, now 22,800 also coming, 23,000 also more addition is coming, 23,200 also more addition is coming. Put side, it is maximum at 22,000. So 22,000 is put and 23,000 is called, and then followed by 23,000, 22,800, 22,500. These are straddle players. Fresh writing is coming more at 22,000, 22,200, 22,800. So the expected range, immediate ranges today 22,500 to 23,200 range, because now we are getting very big moves. So that range is what I'm taking, 22,500 to 23,000 or 23,200. A broad range 22,000 on the downside to 23,500. So overall, global market, if you see, US market have crashed, US VIX is rising, global issues are there, war escalation is there. Domestically, RBI hit on banks, that is negative. Volatility is above 30, which is a danger zone. Indian VIX is above 25, which is again a danger zone. The key takeaway is market is bearish with high volatility. You look for sell on rise rather than buying. It will leak the premium. You will lose the premium also. Monthly expiry, explosive moves may be possible. Towards the end, there can be an aggressive short covering also. If it is possible, try to capture that as well. So focus on oil price, banking stocks reaction, expiry volatility. So that's about the session. Thank you so much. I see you in the next video. If you would like to join the live market mentoring sessions, get in touch with us. We have the live market session every day where you learn trading with us together. See you.